Most people think wealth management is simply about investing money. And that belief is the exact reason so many retirees are anxious to retire, potentially pay way more in taxes than they should, or constantly wonder, am I actually going to be okay in retirement? Because real wealth management has almost nothing to do with picking specific stocks, but everything to do with connecting the dots most people never even see. Let me show you what I mean. I sat down recently with a couple who were in their early 60s. They'd done everything right, saved consistently, built a solid portfolio, never missed a retirement contribution. And they looked at me and asked, Chris, can we actually retire? Not how should we invest our money or what stocks should we buy, just the key question, are we financially able to retire? That's such a great question I get because this is where most people are completely in the dark. So let's break this down because if you understand what wealth management actually is, you'll start seeing your entire financial life a little bit differently. So, number one, wealth management is not just about investments. Here's the first misconception: people hear wealth management and think only about one thing, which is usually investing. And that's understandable. It's how the industry tends to market itself historically. But here's what I've seen after years of working with people in and near retirement is that investments are just one piece of the overall puzzle. And without the other pieces, they can actually all work against you. I've seen people with $1.5 million portfolios who are quietly headed for trouble, not because they're bad investments or because they haven't looked at their taxes, but because they hadn't connected the dots around taxes, retirement income, and overall timing. And I've seen people with far less who are in better shape than they ever realized because everything was structured to work together. The balance isn't what determines the outcome, it's the coordination and the integration that overall does. So, number two, it starts with your life, not your money. Real wealth management doesn't begin just with a portfolio review, it begins with a conversation about your life. When do you want to retire? What are the most excited things you're about? Thinking about for this next phase of your life in retirement? How much do you want to spend on key things such as travel, family, and on things that matter the most to you? Most planning skips this entirely and jumps directly to returns and investment allocations. But the money is supposed to be there to serve your life, your long term picture here in retirement, not the other way around. And once you know this and start building your plan towards this, the financial plan has something to actually optimize for, which is your long term retirement. So, number three, understanding this calculation that can help you understand exactly where you are and where you're headed. And this calculation is understanding your income gap. So, it's simple. What's coming in from guaranteed sources, such as your Social Security benefits, maybe a pension, perhaps things like rental income or income from a annuity, those are all the things that are coming in guaranteed no matter what happens to the markets. So we need to understand how this works versus what you actually need to spend each month. The difference between those two numbers is what your investments need to cover each month, each year into the future. And at the end of the day, this is really for the rest of your retirement. So once you know that gap, you can calculate something even more important, which is understanding what is your withdrawal rate. That's the percentage of your portfolio you need to withdraw each year to make this work long term. And that single number or this overall calculation is more important than your entire account balance. It's more important than your asset allocation, and certainly more important than just one or two specific stocks to purchase. So this tells you whether you're on track or whether something needs to change to ensure you stay on track for retirement. And here's what most people miss. It's not just how much you withdraw, it's also how you withdraw it. Which account, in what order, at what time, and that's where the real complexity begins to live looking at your long term retirement. So this brings us to number four, the hidden tax and the big problem that most no one talks about. Taxes, specifically income taxes, are the biggest silent drain on most people's retirement income. And almost no one plans for this proactively. Most retirees don't realize that Social Security could become taxable. The withdrawals from the wrong account at the wrong time can also push you into a higher tax bracket. This poor sequencing of income could also trigger higher Medicare premiums or even cost tens of thousands of dollars of extra income tax over a decade or two. So, two people with identical portfolios could end up with completely different outcomes just based on how they handle their retirement income taxes. The good news is that the right strategy can help smooth this out over time, reducing your lifetime income tax burden and helping you keep significantly more of what you've earned. But it takes planning. It's not something to do in reaction, but it's something to plan for the future. So this is actually one of the biggest areas where we tend to help people, mapping out tax efficient retirement income strategies over decades, not just for the next year or worst case looking backwards. So if you're curious what that could look like for your situation, click the link in the description below to book a free call. We'll walk you through with you of how this could look. Let's move on to number 5. Let's talk about turning savings into predictable lifetime income. So here's a shift that requires a little extra thinking in retirement, and it's a significant one. For decades, you've spent time accumulating, planning for the future, building, adding. Now the question becomes, how do you turn what you've saved and built over time into reliable income without getting it wrong? So random withdrawals typically don't work in retirement. Markets are unpredictable, but your expenses aren't. So what works is a system, a structured approach that layers your income sources. So again, thinking about guaranteed income to begin with, then portfolio withdrawals, and looking at other ways to pull from strategic reserves as needed. That is where your lifestyle isn't at the mercy of what the market does in any one specific quarter or any given year. When that's designed correctly, it doesn't just protect you from running out of money, it lets you actually spend without the background anxiety of wondering whether your plan will hold up. Number 6, let's explore planning for healthcare, family, and long-term legacy. So retirement income is the center of the whole plan, but it's not the entire plan overall. So healthcare costs, the unfortunate passing of a spouse, wanting to leave gifts to your kids or your grandkids, thinking about what you leave behind is very important. These aren't hypotheticals. They're things that happen all day, every day. And without planning for them, they can disrupt an overall, otherwise very solid strategy. So with the right structure in place, these events can become very manageable and even sometimes be optimized based on the overall outcomes available. So this is really where integrated planning shines overall when we think about your overall plan from now through your life in retirement. So how about number 7? This is what wealth management actually is. So let's zoom out for a moment because this is the real definition of understanding what wealth management truly is. It's not one strategy, it's not a product, it's not just one decision. It is the true integration of every piece of your financial life, which is retirement income planning, tax strategies, social security timing, healthcare choices, estate goals, legacy, all working together towards one single, truly defined outcome, a retirement that you can actually live in without constantly wondering if the plan is going to have to be put on hold. When it's done well, you wake up knowing exactly how much you could spend, exactly where your retirement income is going to come from, exactly what happens if something doesn't go as planned. There will be no second guessing, no guessing overall. This is what the plan is designed to do and to produce and to be for your long-term retirement. If you've never had someone walk through this and how it all fits together in your specific situation, this is exactly what we do at Cornerstone Wealth Planning. I ask you to please click the link in the description below and we can schedule a free retirement strategy call. We'll map out your income gap, your tax picture, and how everything connects together so you can move forward with real, true clarity. I want to leave you with one last thought. A great decision in one area can be a terrible decision in another if these decisions aren't connected and coordinated properly. And this is where most do-it-yourself plans tend to break down. It's not because people aren't smart and aren't aware of things. It's because it's incredibly become complex and it's hard to optimize unless you're able to coordinate all this all together. And that's exactly what we help people build. So thank you for watching, and I'll see you in the next video.